mismatch. The utilization of short-term funds for meeting the long-term needs causing a mismatch between assets and liabilities led the financial giant IL&FS to insolvency tribunal. Markets went crazy assuming the other housing and infrastructure finance companies also follow the suit. Both traders and investors sell off the shares of each and every finance company. The oil prices are boiling and the Indian rupee will depreciate further. When this kind of thinking absorbed the economists and ordinary people alike, markets braced up for a sure hike in policy rates by RBI. Though people knew the difference between trading and investment, most of them were indulged in trading in the guise of investors hoping for quick bucks. These confused souls ended up with heavy losses in the meltdown. The foreign investors also dumped heavily, but their motive was different. They felt that with the falling Indian rupee they would have to take back fewer dollars and to avoid further erosion in their dollar investment value. Because the weakening rupee they became sellers, but not with the general suspicion of the financial crisis. However, markets miscalculated their dumping. On the other hand, a handful of broking institutions spread fears of an imminent doomsday in the offing among market forces with an intention to force traders to square off their margin positions. There are the rating agencies. They had committed a mistake by giving positive ratings to corporates. The same agencies are now reversing the earlier ratings to rectify their early ratings. The abnormally high price-earnings ratios of the indices became another reason for the meltdown of the markets. Markets that had been waiting for a correction in the prices for a long time attributed all the above-mentioned reasons for their fall. In the last 3 days, markets witnessed a fall that was quite unexpected. This fall will stop at this point. They will recover gradually in a phased manner. The soon arrival of half-year financial results could help the market's next rally. The rupee fiasco, the rupee downfall connected with the spiking oil prices has been continuing for some time, and after the RBI's status quo concerning policy rates, it witnessed a turbulent trading and fell to 74 rupees and 22 paise per dollar. Though the fall has been steep, it is still strong against the dollar when compared with peer currencies of the emerging markets. The central bank of the country holds foreign currency reserves that are enough for 10 months' imports. The declining of INR is a consequence of the fall in values of currencies of the other developing countries, but not because of the fears concerning Indian economy. On the oil prices front, the near future seems encouraging. The specific private agreement between Saudi Arabia and Russia, irrespective of OPEC decisions, giving hopes for an easing of the current tight supply position in the international crude market, even as the OPEC members that regulated the production quantity are willing to soften the stand. The peak oil speculation of crude once again will cross $100 a barrel can be ruled out. Since the high prices of petrol can cause a spurt in inflation, RBI had no other option but to hike the policy rate. This was the logic, people. In fact, the weightage of oil in consumer inflation index is less than that of the food items such as agriculture. It is the reason why the inflation did not flare up even as the petrol prices had climbed up. Since the prices of food grains decreased, the August month inflation sharply came down to 3.7%, lower than the targeted 4% rate. In the second half of this financial year 2018-19 also, retail inflation would be in the range of 3.8 to 4.5%, as per RBI estimate. Another important factor in this context is the reduction of SLR, statutory liquidity ratio, rate facilitating a liquidity creation of 2 lakh crore rupees in the system. Only to squeeze the funds back from the economy, RBI would resort to the rate hike. Where was the chance for an increase in the policy rates? When the RBI itself had pumped money into the system. Markets that were overwhelmed with oil prices, INR exchange rates and anticipated inflation worries missed the real thing. There is no chance for RBI to raise repo rates until the 31st of March, 2019. There will be no significant changes in the balance sheets of NBFCs and housing finance companies. Markets should realize this thing on Monday, the 8th of October, 2018. When crude prices are rising, the oil production companies such as ONK Oil, Ceylon Exploration, Hindustan Oil Exploration Company reap the benefit of higher margins. At the same time, the earnings of oil marketing companies such as HPCL, BPCL and IOC will reduce because of lower margins. Reliance Industries Limited is to get higher refining margins. All mid-cap shares lost 50% of their market values in this beaten down market. These are all opportunities in this market at this hour. Mphasis Limited has last traded at 1,125 rupees, whose buyback price is 1,350 rupees. The come date for the buyback is the 23rd of October. Acceptance ratio would be up to 60%. It may be an opportunity. Similarly, the buyback price of L&T is 1,475 rupees while the current market price is 1,230 rupees. Acceptance ratio would probably 20%. It is another opportunity. In the meanwhile, the NCLT, Hyderabad took up the insolvency process petition on Midicon Projects Limited. World Bank blocked the company, restricting it to participate in any tender processes over the next 2 years. The court ordered to liquidate the Mossaber India Limited. Cochin Shipyard Board is meeting on the 8th of October to decide on the buyback proposal. Himachal Futuristic Communications won orders worth 870 crore rupees. The technical analysis might be indicating the continuation of the market fall. In fact, technicals depend on past actions only while deciding the future trend. They don't take into consideration the future issues. Markets will settle at current levels. No issue a further fall from this level. Please do subscribe our YouTube channel. Share Guru Weekly. Thank you.